On Point with Craig's Investment Partners.
Right, hi there everybody. Before we begin, remember the information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risk and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor, and you can find out more about our financial advisory services at our website, which is craigsip.com. All right, I wanted to talk today about the US dollar and whether it is at risk of being dethroned as the world's reserve currency. This is something that I always get questions about from time to time, and at the moment, there's been a few news articles, a bit of media and press about what happens if the US dollar does fall from its position as top dog. What would that mean? So just wanted to quickly address that. I've written a quick research report that you can get a hold of by going to our website or by talking to your advisor. And then you can see a few charts and stats about the history of the US dollar and its position as the world's reserve currency. So head there if you want to know more. But I'll just cover the key points. Look, the US dollar, the greenback, whatever you want to call it, it's been the world's reserve currency for close to 80 years. It pretty much it started to displace the British pound, which probably held that previous number one position. The US dollar started to displace the pound in the 1920s, probably after World War One. That cost the UK a lot of money, and the US dollar started to sort of take on that position, and it has pretty much had that undisputed mantle as being the world's reserve currency since World War II. So, a reserve currency is one that central banks, financial institutions around the world, they hold it as a big part of their foreign exchange reserves. So, our Reserve Bank, for example, it would hold a range of currencies in its FX reserves, its foreign exchange reserves, and the US dollar would be the biggest one by some margin. It's also a currency that is widely accepted in global trade circles. So if you're trading anywhere in any part of the world in any sort of goods or services, chances are US dollars will be accepted. New Zealand dollars, maybe not, but US dollars, yes. So that's what a reserve currency is. And the reason the greenback has been so dominant in that regard, the reason it's such a strong reserve currency is really just due to the size of the US economy. It's the biggest economy in the world by some margin. And if you look at global GDP or gross domestic product, which is essentially economic output, that's almost the total size of the world economy. The US is number one. It accounts for about 25%. China is number two and catching up because it's been growing much faster than developed economies like the US over the last 30, 40 years. So China has caught up and it's number two, but the US is still by far the biggest. It's not just size as well. I mentioned the British pound earlier, and the British pound was the world's reserve currency, even though I think the UK, I don't think it really got to be any more than about 10% of global GDP. So it's not just about size. There are other factors at play. But the US has those too. It's got a stable political backdrop. It's got deep liquid capital markets. It's got a strong rule of law, which means that people trust the way things are regulated and the laws of the US as a nation. And it also happens to have a very powerful military, which is always important, particularly from a geopolitical risk perspective. So all of those things mean that we have a high degree of confidence in the US dollar, which means it's a common medium of exchange. We're going to trust that if we swap or trade something for US dollars, that currency will hold its value and it will be useful to trade it with someone else. You don't want to trade in a currency where if you're not sure if the next person will accept it. And there are many currencies around the world where we don't have that confidence, but the US dollar, we do have confidence that if we swap these goods or services for it, someone else down the track will also swap it with us for something that we need. So all of those things have made it a strong currency, and they make it sort of that top position as the world's reserve currency. Many commodities are also traded and priced in US dollars. When we talk about the oil price, the gold price, even the dairy price, on the global stage, all of those things are priced in US dollars, because that's what they're traded in. So if we talk about oil prices being sort of $70 a barrel, we're talking about 70 US dollars, aren't we? Not 70 euro or 70 pounds or 70 New Zealand dollars. They're all done in US dollars. So that creates additional demand for the US dollar, and it strengthens its position. But for all of that, we've actually seen the US dollar's dominance decline in recent decades. The IMF, the International Monetary Fund, they measure or track the share of global currency reserves, and you can look this up on their website, just like I did, to sort of produce this beautiful chart that you might have seen in this report. And so they'll look at sort of the proportion of global currency reserves that are in US dollars or pounds or euros or Chinese renminbi, or whatever. And the US dollar share of currency reserves, it's still the biggest, but it has been falling. So, it's almost the lowest that we've seen in about 30 odd years. It was as high as sort of 72%, a little more than 2 decades ago in the early 2000s, and today it's still big, but it's down to about 58%. So 58 has been drifting lower, than what we've seen in recent decades, and this has just fueled that talk of what they call de-dollarization, which means a falling reliance on the greenback as it being the world's reserve currency. The euro has become quite a valid substitute. The euro came into being in the very late 90s, so it's been around for nearly 25 years now, and it's probably got about a 20% share of global foreign exchange reserves. So it's number two behind the US dollar, and then you've got the likes of the British pound, the Japanese yen, even behind the euro. So that's been a valid competitor. Longer term, one of the ones that always comes up as an obvious alternative to the US dollar, potentially in the future, is the Chinese currency, the renminbi. And this obviously makes some sense. China's a very large growing economy, second biggest in the world, growing much quicker than most developed markets. Second most populous country in the world, not number one anymore, because that position goes to India. They took over China as having more people a year or two back. But China's still the second biggest economy. It's a very ambitious country, a very motivated country, and their share of that global economic pie is steadily growing. So there's some common sense to that talk that maybe the Chinese currency will become a credible challenger to the US dollar. However, there's also lots of headwinds or limiting factors there. China is a little bit reluctant to fully embrace structural economic reform, market reform. They don't really want to sort of be as transparent, or as free market as the US or other Western nations, and that will probably stop their currency being a credible challenger to the US dollar. They would need to relax capital controls, bolster their rule of law, reduce regulatory risk. They don't really want to do that. They're still a command economy. They don't really want to do all the things that you need to do to be sort of a full-blown player in the global marketplace. So that is something that will maybe hold them back a little bit. Something else that's been in the news lately has been talk of a new common currency being developed between the BRICS nations. So BRICS, BRICS. That stands for Brazil, Russia, India, China, and South Africa. And back in the day, this was a term that I forget who coined it. Was it the chap from Morgan Stanley, very famous economist whose name escapes me immediately? I'll Google it after this. But I think it was a term that was coined to describe those emerging nations that were growing very quickly. And there's been talk of this. I think you had some commentary maybe out of Saudi Arabia, maybe out of Brazil, out of Russia, that they could come up with a new currency to facilitate trade between some of these emerging nations. And I've seen a bit of press about it lately, and I've had a few clients sort of ask me about this BRICS currency. What would it mean? Would it happen? Look, to be honest, I just find it difficult to see. Those 5 countries, geez, there's some pretty serious differences between their economic interests and their strategic priorities. We've obviously got an increasingly close relationship between Russia and China, and that's something we need to monitor for a whole range of reasons. But you look at the others in that group, South Africa, Brazil, India, there's some big differences, and some of those countries are very much removed from what you're seeing in the likes of China or Russia or both. So I just find it hard to see. There's some huge volatility and risk and regulatory issues and economic issues amongst all of those countries. They're just so different. So I can't see that happening. So you can sort of cross that one out as well. Crypto, yeah, look, I don't really want to go there. We'll be here all day talking about some of the reasons why that's not realistic. Maybe one day. I'm not sure we'll see it anytime soon, but some of the crypto followers would suggest that it too has a role to play, but yeah, not in the short term, that's for sure. So, look, those are all the alternatives that are often mooted, and I think there's just issues with all of them. I still think the US dollar is here to stay in a pretty big way. However, if you did put all of those hurdles aside, and if you did see a significant de-dollarization or a lesser reliance on the US dollar as the world's reserve currency, there would be a wide impact on financial markets. That's for sure, absolutely. So it is something you want to turn your mind to or sort of think about. The US economy, it's the biggest in the world, the biggest share market in the world, the biggest bond market in the world. The economy would face higher interest rates, the US economy, if it didn't have that reserve currency status. Its share market probably wouldn't maintain the valuation premium that it currently enjoys. I think you would see US assets fall in value, both in absolute terms and also relative to others. It just sort of wouldn't be held up in lights. And you would see investors start to look elsewhere. At the moment, the US is probably the first port of call. When you think about putting that extra dollar to work, that's the natural place you put it, because it's the biggest economy, biggest share market, biggest bond market, world's reserve currency, very, very credible, very safe in that regard. It's always the place that holds its own during periods of turmoil or uncertainty, and the US dollar is always the top performer during those periods, or one of the top performers. So it's the natural place you go. And if you didn't have that reserve currency status, that probably wouldn't be the case. So the US would lose a little bit of its luster. I just can't see that happening anytime soon, though. I think the greenback is still going to be top dog for a while yet. I can't see King Dollar being dethroned. When you just think about all of those attributes that you need to be a reserve currency, and there's a lot of them, the US has just got too many on its side, including the fact that there's no obvious alternative, no credible alternative, not in a big way. So, long story short, I don't think this is something investors need to lose sleep over. Give it some thought, ponder it. It's interesting what you're seeing at the geopolitical level, and in the course of time over years and decades, probably absolutely something to monitor. You could see the US dollar continue to lose share in terms of its proportion of global currency reserves that it represents. So that could keep drifting lower from its current 58%. It's gone down from 70% in 2001. It's now at 58%. Yeah, sure, it could keep drifting lower, but I don't think it's likely to lose that number one status anytime soon. I don't see it really coming under threat. As investors, I think you just want to hedge your bets as always. We hold a range of international assets because there's lots of great assets out there. And at the end of the day, when we're investing in businesses, we don't really care where those businesses are based. We just want the best businesses that have got great products or great services, competitive advantages, they're innovating. So we're actually looking for the best companies. We're not necessarily caring where they're based. So, if Microsoft or Apple or whoever, if they decided that they weren't going to be based in the US and the share prices weren't going to trade in US dollars, if they, for whatever reason, headed off to Japan or the UK or wherever, this never happened. But we'd happily buy them anyway because we're looking for the businesses. We're not so hung up on where those businesses are or what currencies we buy them in. The currency is just a vessel to get to that underlying company that we want to own. So remember that we're not sitting here speculating on currencies or trying to play currencies. We're really just trying to buy good assets that will generate strong cash flows and growth over the long term. And it doesn't really matter what currency they trade in because we're going to end up back in New Zealand dollars anyway. And a lot of these businesses, their underlying earnings are all around the world anyway. So you take a lot of those big US behemoths that we know and love. We buy those in US dollars, swap our New Zealand dollars for US dollars, buy them in the US, the New York Stock Exchange or whatever, and their earnings are reported in US dollars, but they're selling into all parts of the world anyway. So they might be selling into South America or Africa or Europe or Asia or North America or a mixture of all of them. And then they'll get those revenues and earnings, and then they come through in their financial statements in a US dollar sense. But they have very well diversified underlying businesses. And you'd say the same about a lot of these big UK companies, whether it's Unilever, whether it's Diageo, whether it's Rentokil, whoever, they're global businesses. So don't get too hung up on sort of the currency moves. Remember what you're trying to buy and the fact that currencies are simply the medium of exchange for the translation of those earnings, profits, dividends, prices. Now, that doesn't mean we don't think carefully about currencies. We're much more comfortable holding US dollars than, oddball sort of emerging market currencies that tend to be very volatile and represent countries that don't have that same level of credibility or transparency or regulation. So it does matter, but you've just got to take a more holistic sort of view and marry up that sort of top-down economic and currency view with that bottom-up sort of company view and remember what you're buying. So I still think for most people the answer is to not try and speculate on which currency is going to do what, just focus on buying great assets and be well diversified, holding a range of international assets denominated in multiple currencies. The US dollar probably will dominate because that's where many of the world's best businesses happen to be based, and it's the world's biggest market. So it's normal for your portfolio to be dominated by US dollar businesses or assets. However, you probably want to make sure that you've hedged your bets and you've got some others out there too. Lots of great businesses that are based in Europe or the UK or parts of Asia, Japan included, China included. So hedge your bets and own a bit of all of those, and we'll continue to monitor these sorts of developments, whether it comes down to currency moves that you're seeing on a short-term basis or some of these longer-term trends about other currencies making their presence felt a little bit more on the global stage. So I hope that's helpful. If you want to know more, talk to your advisor. They're absolutely the best port of call. If you want to know if your portfolio is set up in the way it should be and whether you have got some of these risks and opportunities covered appropriately. So I'll stop there. As always, thanks for listening, and we'll talk again soon.
For more insights, visit craigsip.com.